Hey guys, welcome to another portfolio update for the week. We'll start off looking at the Nasdaq here. So we've seen a bit of weakness in the Nasdaq, the whole market really, pushing down about 7.5% in this little low here on the 12th. So this is like exaggerated in the high growth stocks. We're still seeing that high growth stock sell off. A lot of, well, I'll show you the Dow. So it's not so significant in the Dow, down 2.2% basically. Oh, sorry, 3.4%. And the S&P 500 down 4%. So it's significantly more prominent in the Nasdaq. And if we look at the Russell 2000, it should be even more prominent again, I would guess. A bit of a different shape, but down 6% from there, down 7.3%. Similar to the Nasdaq, but the Russell 2000's seen more like stagnation, a longer stagnation period. So this kind of shows how long this high growth stock kind of sell-off has been going since the peaks were reached in February, really. This doesn't fully show, like if you had a graph of just like high growth stocks, it'd probably be, you know, trending a lot down, like depending on what stocks you put into that. But yeah, my stocks have been down again a lot. They went as low as 42,000, which with a cost basis of 37,000, that left me with a profit of 5,000, which put me down 15,500 from all-time highs. So I've bounced $1,700 off of that. Yeah, granted that says 1.9k, but given the currency conversion, that only translated to 1,700, roughly, just due to daily fluctuations in the exchange rate. So now I have $6,700 in profit, and honestly, I kind of want it to retest the lows because I have just organized a mortgage top-up. So I'm going to add $10,000 to my mortgage, and with that money I was planning to put potentially another 3,000, would be the ideal number, into the stock market, which would bring me up to around $40,000 investment in stocks. And the remainder of that money I will use to speed up the finishing of my home renovation. Yeah, I'll go through the numbers. So my stock's all-time high was 57.5k, and as you can see, down to 43.7. It did go down as low as 42k, which was 27% down from all-time highs. I know people who have more high growth geared portfolios who are down 40% or so. I mean, if you were super high growth and low revenue or pre-revenue companies, you could be down as much as like 50% plus, which would be quite horrible if you'd done that, but is what it is. High growth usually has high volatility. That's the price we pay for greater returns. So I'm currently down 24% from all-time highs, I believe. At 43.7k, that's down 24%. That 10k that I'm topping up on my mortgage is only going to cost me $18 per fortnight as repayments, so really insignificant amount 2.25%. I believe I can get a greater yield than that from the stock market over the next 12 months, so I'm not worried about that. Also, it's gonna, if my renovations aren't finished fairly promptly, it's gonna start costing me money, so it's better that I get it done quicker and I have the money to do so now, as opposed to waiting and spending like $750 per pay on my renovations. I can just spend the money up front, get it done quicker. Yeah, so that's my stocks. I'll show you. Maybe I won't show you. We'll see. I'll leave that one. This is my Sharesies account. You can see most of my stocks are still red, even more red than they were before. I'm quite glad that I got into, what was it, Dropbox and WBA in around when the market was peaking. They were the two value plays that I got into, and they have performed the best out of all the stocks I own. In fact, there's still two other stocks that aren't negative in this portfolio, in my Sharesies account, but this is up 250%, and not sure what percentage that was up, but it's, yeah, still significantly down on from all-time highs on Square. But yeah, Square hasn't been doing too bad, as opposed to, you know, the other stocks that like MicroStrategy is down from it's over 110% or 120% or something up, and now down 11%. Yeah, we'll move on to Hatch account. You can see interesting numbers here. It was up 108%, now all the way down to about 48%, 41% at lows. That was just a couple of days ago. Still got my workhorse sitting there at negative 70%, or from basically minus $1,000. Unfortunately, that's a crazy number there. Horrible timing on my part for that one. Yeah, Tattooed Chef and Corsair Gaming still have heaps of conviction in those two. Looking at potentially adding to CCIV. I never would have thought it would have come back to these kind of prices. Like, it's almost down to my cost price, and like I got in this one pretty damn early, so that's pretty crazy that's come all the way back down, considering it was a $10 SPAC and it's trading at, you know, an $8 premium for now having a company attached to that SPAC. Obviously they're, you know, pre-revenue and everything. I don't think they've sold any vehicles yet, but I'm not 100% sure on that. I haven't looked into CCIV recently, haven't been keeping up to date with them. Checking New Zealand dollars, what have we got? 13.3k, well off of all-time highs. That's all good, just another buying opportunity. Yeah, you can see in this little graph here, it shows my returns relative to, forget what that is. It's an index of some sort, the S&P 500. So that's my returns relative to the S&P 500. Yeah, fair play. Looks like I was doing amazing, destroying the returns of the S&P 500, but has to come back down to earth eventually. And realistically, it's a healthy cycle for high growth stocks to come back down every now and again. Otherwise, well, you get things like the tech bubble where valuations just no longer justify where they're at, and yeah, eventually it has to come back down. It's better that it happens more frequently, and it's better that it happens more frequently so you don't lose like a larger percentage of what you put in. Less people get screwed over if it happens more often, essentially. You can see total change in all my stocks. Very few sitting in the green right here, but as I've said in previous videos, it's because I've sold a lot of stocks, and the biggest gainers that I had that I've sold put me in the green for this. Like, if I had have started investing in the past 6 months, or maybe even 10 months, I would be red. I would have lost money. But luckily, I've been investing for around a year now, so I'm still slightly in the green by six and a half grand. Yeah, I'll just mention that final day in the market, Friday, was a great day. There was a huge bump, obviously 4.6% in my portfolio, but I know people who had 10% plus days in their portfolio, like if they were more high growth geared. But I also know people that are getting out of the market in these low times, and I want to kind of tell you guys, like, this is not a good idea to get out when you're at lows. It's like, I get the psychology behind it, and it's scary being in a market that just keeps going down. But the further down we go, the less risk there is associated with owning these stocks, because they can't keep going down forever. And even if they go down like below where their intrinsic fair value is, they're going to come back up to that in the long term. Valuations do detach from like where the company's at, but generally they do the pendulum swing back and forth across that number. So if you feel that these valuations have swung below where they should be, then eventually they're going to come back up to being in line with where that company should be, or where that company is performing. And personally, I feel like we have gone a bit below where a lot of these high growth companies are performing and have the potential to perform in the future. So I feel like, I'm not going to say that we're at the bottom or that we've passed the bottom, but we are below where we should be. And so we will be trending back up at some point. There's lots of different theories out there about when that's going to be. Could be coming into the summer. Could be summertime in the US, that is, obviously. Could be when the inflation data starts changing. So they do the 1 year inflation data, and it's based off of, obviously, 1 year ago, the month they post it, which means that the statistics from 1 year ago, that changed very fast around March, April, May last year. They are skewing the percentage results for these current data sets that are coming out. So once we get through that period, which I believe April data was supposed to be, well, Meet Kevin put out his predictions, which predicted April data would be the worst. So when we get May data, approximately a month from now, should be looking a bit better, hopefully. But hey, that's subject to change. I am no professional. I'm not a financial advisor. I simply take in as much information as I can and try and simplify it and express my opinions. These are nothing but my opinions. We'll go into crypto now. So crypto is not doing too bad. It's about $800 off of all-time highs. So there's been a bit of a shake-up in crypto recently, with Elon Musk announcing that Tesla will no longer accept Bitcoin payments due to the high usage of fossil fuels in Bitcoin mining. Which, yeah, it seems like a very weird thing for him to say. Obviously, he would have had to have been aware of this prior to this happening. And there's lots of theories about whether he's, being a child and changing his mind every 5 minutes, or whether he has some mastermind plan around giving Bitcoin the publicity it needs, and then switching the tune in order to push Bitcoin in a more economically friendly or environmentally friendly direction, but I'm not going to speculate on which of the theories is true. I really don't know, but he has pushed down Bitcoin significantly with the comments that he's made, and there was quite a big pump in Dogecoin because he mentioned that he's working with the Dogecoin developers to potentially look at increasing or making them more environmentally friendly, and could potentially be used as payment for Tesla as well. But that is unconfirmed, and he tweeted about it. Really, it's often publicized as like an announcement. They always say Elon Musk announced. He tweeted it. Like, it's really so informal, such a weird thing for him to do, but hey, it is what it is, and that's just what he does. We've also been seeing a couple of coins outperform the others, like ADA, Cardano, and it was trading like $1.20 for so long, and I was holding it and I was just getting bored of it sitting there, but now it's just gone off, and it's almost doubled in past few weeks or so. So yeah, it's doing pretty well. A lot of the other coins have pulled back from all-time highs following Bitcoin. I believe there's been a few other small cap coins that have pulled ahead of the pack due to their more environmentally friendly nature and their greater efficiency in terms of mining. But I don't follow any other coins apart from the ones that I own, really. It's already too many to follow, like can't be following other coins that I don't own. Yeah, that's pretty much all I've got for crypto and stocks. So what else is there? My house. I got the updated value of my house that's done by the CoreLogic eValuer. It's now valued at $525,000, which is $105,000 above where I bought it 8 months ago. So huge gain in 8 months. I've spent $17,000 so far on my renovations. I will probably spend another $5,000 or so to finish up the toilet and bathroom, and the hallway and kitchen are part way finished. I still got some stuff to do outside as well, so it'll cost me a bit as well. But yeah, getting closer and closer to finishing, and made over 100 grand in equity. Although you do have to consider the CoreLogic eValue is probably comparing my house to like a finished product house, not as it was before I got it. So from that 105,000, deduct like 25,000 for renovations, so looking at a profit of about $80,000. But yeah, super happy. $80,000, that's over 8 months, that's averaging 10k a month, which is huge. Absolutely insane. Better performance than my stock accounts, that's for sure. And considering my initial upfront investment was 84k, and we're going to put 25,000 into it, puts it at about 110 investment, and I've made 80k off of that, so that's like a 75% return or something over 8 months. Huge, massive. So yeah, everything's going well. Looking at investing more into stocks while the high growth stocks are low. Still got high conviction in a lot of these stocks. My highest conviction ones would probably be Tattooed Chef first, for sure. Palantir probably second. Fiverr, Planet 13, Coinbase, Corsair Gaming, CCIV not so much. MicroStrategy's kind of been, it's not really been performing the way I expected it to. It's just been way too volatile for me, to be honest. It's insane in space as well. Way too volatile for me. Shopify, huge conviction in Shopify. Love it. Yeah, that's probably it. My conviction in these few aren't quite as high, but everyone's got their favorites for various different reasons. Just choose the ones that you have the highest conviction in, you've done the most research in, and feel they have the best opportunities. And if they keep going down, just keep buying them at good prices. Hold them for the long term. Can pretty much guarantee, like, a lot of these shouldn't say guarantee. Can't guarantee it at all. But I highly believe that all of these stocks 1 year from now will be at a higher price. I wouldn't own them if I didn't think that. And yeah, that's pretty much how I think everyone should run their own portfolio. Don't own a stock you don't think is going to be worth more in a year. Like, although that said, consider the company behind it. What I really mean to say is I believe the company behind these stocks will be worth more a year from now. Whether the stock price reflects that or not is in 1 year from now, who knows. But long term, like 3 to 5 years out, everything will eventually find its way back to the company's value. Always does. And yeah, so I like my portfolio at the moment. I'd like to add some more money to those higher conviction stocks, but I'm still going to leave those other positions in there that are a lower conviction, but still got to have some speculative money in there. And I'd feel pretty bad if I didn't have like money in like EV, if I didn't have CCIV and Tesla, and well, to be honest, I don't have any Tesla, $35. If I didn't have CCIV in there, like even though it's not a super high conviction stock for me, I still like to have it in there because it's, well, that and Workhorse are my only two electric vehicle plays. And there's a few others in there that I just hold for exposure to specific sectors and such. But yeah, anyway, thanks for watching. Leave a like, comment and subscribe if you want to. Have a great day, and thanks for watching. See ya.